CPI data suggests inflation is cooling and the market continues to melt up. Where are we going from here? Are we reaching a new high or are we going back the other direction? Let's talk about it. Welcome back, everybody. Don Miller from Market Beat here with Thomas Hughes, about to go over what's going to be happening in the market next week, what happened this past week, and kind of where we go from here. Thomas, how are you doing today?
I'm doing good, Don. How are you?
Always good. Market this week, Thomas, extended the rally, if you will. CPI came out, PPI came out, both kind of cooler than what was expected. The S&P gained about 3% for the week and is closing near new highs. What do you see going on next week?
Next week, I think the market will probably continue to move higher. Right now, what I see going on is kind of a melt up within a rolling bear market. You know, a rolling bear market really just means a trading range punctuated by upswings and downswings. We're still in an upswing right now. It's been a little bit stronger than I thought it was going to be. Right now, it's being fueled by the inflation data. The data is still kind of hot, but it was cooler than expected. So better than expected, but still kind of bad. But what that's done is pushed off the fear of recession. The market corrected to where it was on the fear of recession that just hasn't really shown up yet. That recession, I'm going to call that a rolling fear recession because it's still there. It just keeps getting pushed off down the road. As it gets pushed off down the road, pushed off down the road, it's allowing the market to move higher. In that scenario, I see us, the S&P 500 moving up towards the ceiling. It could be at the all-time high. It might not be hit until later on in the summer, early fall, which means we could hit a new all-time high. I mean, that's totally possible right now. As many reasons as I can think of for the market not to be rallying, it's still possible.
Thomas, I want to get back to this recession talk for just a minute here. We've talked about this new normal, these bits of news that come out, and you just said it yourself. We kind of kick the recession can down the road over and over and over again. Do you really think that's what's happening now, or are we really trying to turn the corner and go back the other direction?
What do you mean, as far as the economy or the stock market?
Yeah, as far as the economy overall, I want to play the devil's advocate here because I know you're probably going to disagree with me. Let's just say things are getting better. People are getting excited about the market again.
Right.
Are we there, or am I just buying into the hype myself?
I don't think we're there. I think what's going on is this bear market rebound, this bear market rally has extended longer and farther with more momentum than expected. You know, we haven't exited this period. The recession is still looming over our heads. We've just had this underlying momentum carry the market farther for longer. Within that, I kind of had this thought myself, and I should have written it in the preview, is that I'm kind of turning bullish myself because it seems like things are getting better, right?
Sure.
Seems like it. They're better than expected. But really what it is it's just better than expected for longer than expected. And in this scenario, I very often find myself, well, I might as well just turn bullish because the market keeps going up. But as soon as I do that, bam, we hit the ceiling and we correct.
Right.
So in this scenario, I'm very, very leery. The market can continue to go higher. There are some reasons to propel it. There's not a lot of reasons for the rally to be in place to begin with. I'm very leery of how high it can go and its sustainability. I think that we are heading for a ceiling and there will be a correction. It just depends on when, at how high the market gets before it falls and how deep it falls when it does fall.
All right, I'm going to give you a chance to pull up the chart here in a minute and take a look at the S&P 500 because there's several times over the past several months we've tried to break out this channel, this trading channel that we've been in. Now we're out of it, but now like that ceiling is there that you're talking about. Okay, go ahead and bring up the chart.
Now that channel you were just talking about was, we were watching this level here, 4,300, 4,150, 4,300 as resistance. And I thought that might have been the top of the range, right? But market's broken through and it's moving up higher now. What I'm seeing now is that this is probably the middle of the range. So the market, we had this little correction for the market catastrophe that we shall not name. Correction, huge rebound, way bigger than anything we've seen in the past as far as a market rebound of this nature. So just really, really big. And then this correction is really big too, bigger than we've seen before. And so right now the market is just reestablishing equilibrium. And I think that the 4,300 level might end up being that point. The caveat here right now is just that the market is melting up. We're approaching some more significant resistance. But I think that if the inflation data remains on the cool side and earnings remain on the kind of better than expected side, the market will keep drifting up. It's going to break through these resistance points and we'll get a new all-time high. What happens then will depend on the data and how the outlook for earnings unfolds.
Thomas, that's a great explanation on the chart. And by the way, folks, coming up really soon, we've talked Thomas into giving us a kind of a chart school, if you will. We'll be doing videos on how to read charts, where to pick up the buys, pick up the sells, the head and shoulders, all those terms you've heard about and probably don't or may not know what they mean. We're going to be rolling those out soon. So if you would give us a like, hit that notification bell, you'll get notified when those start rolling in. This week we had earnings come out and Delta caught my eye. JP Morgan, there was a couple of strong ones in there, but there's also some not so strong indicators in there. Or earnings reports, if you will. What do you read into that?
Well, the biggest companies in almost all industries and sectors are doing pretty well because they had the leverage to operate. We've got some specific isolated stories. Delta and JP Morgan are going to be two of those stories. Financials are the only industry that's really set up to profit in a high interest rate environment. And that is completely seen in their results. All of their gains were made in net investment income. That's interest rate gains. And then as far as Delta, I think the Delta story is really similar to the restaurant rebound. So the restaurants and the airlines really got hit hard because of the pandemic, and they're still recovering. They didn't have the same bubble that everybody else did. So while the broad market had this huge bubble and it's correcting back to normalized, the airlines are just normalizing. And so those two trends are kind of coming together, and Delta's doing fantastic. I mean, they've raised prices, increased efficiency. They've got more seats and more planes in the air, and they're doing great. They're paying down their debt. I think they're hit record levels for business, but I think there's going to be a top to that rebound as well. I mean, these two normalizing factors, people who have wanted to travel are going to get that bug out of their system and realize that, maybe we don't have as much money left over as we thought we were, and the next travel plans might not happen, So
all right, earnings next week. I want to talk about three different companies. Bank of America, one, obviously another banking stock. Charles Schwab kind of got caught up in the whole First Republic mess and whatnot. Never really recovered from that. But what are you expecting from both of those this coming week?
Bank of America should do well. They should have the same tailwinds as JP Morgan. Interest rates are gonna boost their results for sure. The questions that we want to see answered are how are credit losses piling up, how are their credit reserves, and kind of what their outlook on the consumer is. Jamie Dimon said that the consumer was still resilient, but that they're using up their cash reserves. So I think in that regard, consumer spending might be heading for a cliff too. People are comfortable right now spending, but soon they're going to realize that, hey, we don't have the savings we used to have, and then spending will slow down. As far as Schwab goes, you're totally right. It got caught up in that whole FRC kind of scandal, that banking fallout scandal. Shares are down hard. They've bounced back a little, but I think they're still down like 20 or 25% from the pre-collapse price levels. Undervalued. And I think that they're going to outperform. The consensus estimates are down way low compared to last year and last quarter. They did not have the bad quarter in the very last report that people thought they were. I think that they're going to outperform top and bottom line and could really reinvigorate the market.
Sure. Okay, this last one, Tesla. Tesla is one of those stocks everybody watches for. Every time Elon Musk tweets something, says something, Tesla news comes out, the stock reacts up or down. They came out with, I guess the way they do it is they report how many vehicles they actually put into circulation, if you will, or sold earlier this month, or might have been the end of last month. What can we expect from Tesla? What are you looking at?
Tesla will outperform the consensus estimates. I mean, that's the way I'm looking at the data. There's no way that it could not happen. The delivery and the production numbers were well above consensus. The analysts have almost only been lowering their targets. I think the bar is set low. They've proven to have strength and momentum. I would be really surprised if they did not beat the consensus estimates. I think it could be by a wide margin. The stock is already rallying higher. I think that a good report will send this stock up. I mean, it could be a significant move, 5%, 10%.
Yeah, I agree. And by the way, folks, we'll link down in the description below. Tesla was one of those stocks that we chose for June for the rest of the month. I think Lacey had it going up over 300. She may turn out to be right. I hope that she is. Thomas, I want to thank you for joining us again this week. I would look forward to the stock chart videos as well.
They should be fun.
Yeah, those would be really informative, people. Make sure you subscribe. You're going to want to see those. Thomas is one of the best technical analysts that I've ever seen, and certainly the best one that we've got going right now at Market Beat. But until then, Thomas, what are we going to say?
Until then, remember the trend.
We'll see you, buddy. Take care.
See you next week.